We're live?
We are live.
That was tricky. How can we learn from Aphria about how to handle troubled situations, a crisis? How does it differ from CannTrust and their failure? That's what we're going to talk about today. And welcome to episode 18 of Martinis with Scott. Ashley, what are we drinking today?
We are drinking a classic vodka martini with Tito's vodka.
Tito's. That's because we're out of, I should have faded that music. It's because we're out of the Fernie Distillery music, I assume.
We are.
Hey, everybody. I'm sick with a cold today. We're struggling through. I look like crap, but hopefully we get this done. Episode 18, we're back after a few weeks of holiday and taking time off in late August. But excited to get back at it. And hopefully we'll struggle through today. We're live from 20 Bay Street in Toronto at the Sinclair Range offices. And again, Martinis with Scott is a show that's an in-depth conversation about winning at business. I'm trying to help business owners, management, entrepreneurs, tackle business issues and win. So with that, if you're having a drink on a Thursday afternoon, please join me. Remember to subscribe to YouTube, the Martinis with Scott channel on YouTube, Apple Podcast, Spotify. Viewership is going up everywhere. Subscriptions are starting to take hold. And we have some decent content up there. So it's been great. And we're looking forward to moving forward with the fall agenda. So let's get at it. Talking about Aphria today. Now in August, we did a couple of shows on CannTrust Holdings, I guess, which is a cannabis company in Canada that was hit with some, I don't know, how would I put it? They were hit with some adversity, and specifically Health Canada, one of their regulatory bodies, in essence, shut them down for growing cannabis illegally when they didn't have a license in a specific area of the room, and they lied about it. And as I said at the time on these two shows that we did about cannabis, that I don't want to do current events on Martinis with Scott, because this is about dealing with business issues and trying to give advice to help, management and business owners get through whatever they're dealing with. But if I can use a current event and a topic of interest to me and to other people to highlight some relevant topics, then maybe that's an interesting way to go about this. So we did two shows that way. And as I said, CannTrust, you can go back and look at those shows, but CannTrust is a company that was faced with adversity and did a terrible job at dealing with it. Seems to me they did everything wrong. And they lost a bunch of market capitalization, a lot of value as a result. And I tried in those shows to hammer home 3 points when dealing with trouble. And this would be from we have a 10-point list on how to refinance a company that's in trouble, and it's really how to do a turnaround. And so number one is you have to admit to yourself that you're in trouble. If you want more detail on that, you can go back to prior shows. But if you walk around as an executive team or as a board of directors or as an individual thinking that, well, things are just going to be changed tomorrow on their own, and I don't really have to do anything. The new sales are coming in, or we just have to be rehabilitated, was the CannTrust words as a board of directors, and we're going to be fine. If you can't look inward and say, wow, this is a serious issue and we need to get on it right now and change what we're doing, then you're not going to get out of the trouble. And you're not going to convince, most importantly, you're not going to convince stakeholders that are external to you, but also your employees, your internal stakeholders. You're not going to convince anybody that you're dealing with this seriously. So that's number one. Number two, make changes. And immediately, not tomorrow, not a week from now. And in CannTrust, you get a lot of, we plan to make a plan. We put together a committee and we're going to try and make a plan. They didn't come out with a plan. They came out with a process for making a plan. And that's not good enough. And then the third thing is to have a plan and to execute on it. Identify the bad guys, the people that cause us trouble, make changes, bring in new blood, have a specific plan, and execute on it. So admit you're in trouble, make changes, get rid of the bad guys, bring in new people as required, and have a plan that is specific. Olga saying, plan to make a plan. I like it. I'm glad you like that, Olga. Before we move on with this and with Aphria, just want to remind you, we're not in the investment business. We're not in the securities business. We don't give you trading advice. I'm not even really concerned if I have all the facts right in reviewing CannTrust or Aphria. Some of it might be wrong. We're not giving an analyst report. There's fog of war on some of this, not so much the Aphria because time has marched by, but on CannTrust, we did the shows sort of right in the middle of the crisis. So a lot of the information we drew upon, you have to wonder whether all of that is specific. But the point being, don't rely on this to trade. I think, part of what we should add on to that is the Martinis with Scott channel, Sinclair Range. None of this have any interest in Aphria whatsoever. We do have an interest in CannTrust. We have a short interest in CannTrust and always have had for obvious reasons. But on Aphria, we have no interest whatsoever. So let's do a brief overview of Aphria. You can look it up on your own and get your own details, but just to bring the users up to speed, our viewers is what I mean, the users of the podcast. So Aphria Inc. is a company. It's located in Leamington, Ontario, which is, if you're an American, is not far from Detroit. I mean, like maybe 10 minutes, forgetting about border security. Very close to Detroit. It's a great growing area. As it happens, I have advised and our team at Sinclair Range has advised a company in the cannabis space, a greenhouse grower that was literally a next door neighbor across the chain link fence to Aphria. So I think I know that growing facility pretty well. So they sell cannabis, grow and sell cannabis. They're a licensed producer. They have pharmaceutical, medical grade. They also have adult use under various brands such as Soleil and Riff and Good Supply and Broken Coast. Revenue, this should be a trailing 12-month number, was about 237 million, which was the last time I looked, maybe 2 weeks ago. Trailing EBITDA, 12 months of a loss of 41.1 million. And don't get too hung up on that. There's lots of reasons to lose money at this stage of a business, and also with the grow prices, the commodity prices going up and down, and mark to market, all that sort of stuff. I haven't looked at why they lost 41.1 million. It's not relevant to my discussion today. I'm just saying let's not get hung up on that. Share price today, I took a quick look on my way in here, was a high of about $8. I don't know where it closed. Market cap would have been about $2.2 billion. So a significant market cap on the company. A 52-week high of $22 and a 52-week low of $4.76. So today we're at 8, and the former high was 22. The former low was $4.76. So let's move forward with the story of Aphria and see what we can learn with this, because this is a company that had a crisis starting around October, November, early December 2018, and it was sort of over by March 2019. And we can contrast that with the experience of CannTrust, which I won't do in detail because we've done shows on it, but just to highlight on the points. So October 2018, Aphria had a share price of over $21, which is a market valuation of somewhere around $5 billion. Not bad for a Canadian cannabis company with, I don't know what it had at the time in terms of square footage of greenhouse space, but probably 400,000 square feet, somewhere in that range, maybe less. By the end of November, so let's call it 45 to 60 days later, the stock was at $11. So it dropped from $21 to $11 in 45 to 60 days. And so it lost $2.5 billion of market capitalization, which may or may not be a fair market value estimation, but certainly the markets were against it. So why did it lose that? And there was starting to be some uncertainty in the industry for sure. And so there's a million reasons that, add into or contribute to the problems of a stock of this sort of any particular time. But there's no doubt that there was significant short pressure against Aphria at the time that either contributed to or outright caused the stock to drop. Now, I haven't gone forward and tried to find any details on the short positions. I don't really care, and they weren't readily available on the systems that we have. But it's pretty obvious that there was a strong short against Aphria in October, November 2018. And in fact, I think if you go back and look at the charts, you'll see there was one probably about 2 months before that as well. And it drove the stock down, and then it climbed its way back up, and then it was clobbered again. And so let's talk, before we go on to the story further, let's talk about what short sellers do. Well, we all know what short sellers do. They're selling stock in advance of owning it. So you borrow shares, or you do it synthetically through some options, but you borrow shares, you sell them, you hope the price of the stock goes down. You go to the market, you buy the shares back at a cheaper price than what you sold them for, and then you repay your loan with the shares that you just bought cheaply, and you made a profit. So the idea here is that you have speculated that the stock will go down, and so usually these days with short sellers, you have the short reports that come along with this, which is researchers that contribute to a short selling scheme, and they issue reports about all the negative things going on with the company to try and convince the market at large that this company is in serious trouble. So what do short reports look like? What do these people do? So I think the formula is that you find a company where you might think there's suspicious stuff going on, right? That could be bad accounting in terms of the press releases. You short the stock. You issue a report on the company, a negative report, in hopes of driving the stock down, and then you profit from the short position. And so the allegations that you make in the company, are all negative. And do they have to be true for this to be an effective strategy? No, they don't have to be true. They have to be allegations. You try and, as a short reporter, issuing short analysis, you try to, make yourself credible. But you don't have to be right. That's not the point. The point is just to scare everybody and drive the stock down. Do the short reports have to be persuasive? Sure, but not for long. I mean, you only have to drive it down for a couple of days or a week to get out of the position, and it was a successful strategy. I mean, it's more fun if you could drag it out for a year, I'm sure, but you don't have to be persuasive endlessly for this to work. But you do have to be a little bit persuasive for a short period of time. And how would you accomplish that if you were in this business? And I think one of the answers to that is you would present yourself as the saviors of capitalism and markets at large and everything that's evil. And you would present yourself as the high road, the credible people. And in fact, not as investors at all, but just people that are really smart, that like to do research reports, and you would send it out to the market with that sort of vibe on it, that you're a researcher and not an investment advisor. And so that's what this business is. You can probably tell from my synopsis of it that I think there's a role for it in capital markets, but I'm not a fan of this product. I think it's the modern day pump and dump in reverse. And it's an industry, and it looks to destroy companies. But in some cases, there are companies that should be destroyed, and there's a rule for this. But as an investor, this is not a show giving investment advice. But you see this sort of thing, you need to take it with a grain of salt and understand that it's a business model. All right. So why did I tell you all that? By November, the stock's been driven down on Aphria. December 3, we're going to introduce Hindenburg Research, which is a U.S.-based, I believe. I'm not sure where they're from, but I think they're a U.S.-based short firm. that does research. And so you take from their website, it's Hindenburg Research specializes in forensic financial research. And we often look for situations where companies may have a combination of accounting irregularities, bad actors in management, or key service providers, undisclosed related party transactions, illegal and unethical business of financial reporting practices, undisclosed regulatory product, or financial issues. So this company, Hindenburg, came out with a report against Aphria. Of course, they've already driven the stock down with the short position. And they issued a report on Aphria on December 3, 2018, December 6, 2018, and December 28, 2018. So they just pounded on Aphria during December. So you need to understand the scope of the crisis and the scope of the allegations against this company, because I might argue this was far more severe than the crisis that CannTrust was facing. And I know what you're going to say. Well, Scott, CannTrust was shut down by Health Canada, and they can't sell any more cannabis. So that was a pretty severe crisis. And yes, but I think when they knew about the crisis, which was several months before that, they weren't shut down, and they could have handled things a lot differently. But when you hear what Aphria, the allegations against it were, you might think they were significant as well. So in general, Hindenburg had to say that they were of a strong opinion that Aphria is part of a scheme orchestrated by a network of insiders to divert funds away from the shareholders and to put it in their own pocket. In general, Aphria insider Andy DiFrancesco, they name, sets up or acquires an international company, provides a token justification for the acquisition, which could be a conditional cannabis license, a piece of real estate, a lease facility, a small existing retailer that has cannabis or CBD products, and a license to do that. And so Andy creates a justification, they allege, to buy something in a foreign jurisdiction, and then he takes this international company, puts it into a Canadian shell under the control of him and his private equity firm, and that shell company sells the interest in this ultimate target to a company called Synthian Biosciences, where Andy DiFrancesco and Vic Neufeld, who at the time was chairman and CEO of Aphria, have interests in insider roles. And then Synthian sells its stake in the entity to Aphria for a large markup. So in summary on that, if you found that confusing, is you find a super cheap asset related to the cannabis industry in Jamaica or Argentina, a few different places they did this. You run it through two shell companies, one private, one public, and ultimately it gets flipped to Aphria, and you make a whole bunch of money because there's a big markup in between. And so in summary, according to the Hindenburg people, they buy something worthless. They run it through these two shells, and the effect has been massive, is the argument. They estimate that at least 50% of Aphria's $1.46 billion in assets have been diverted to investments that are at best grossly inflated, and later they say worthless. So they're alleging this is a 800 million or so, 700 million Canadian dollar scheme, where insiders have sucked value away from the shareholders of Aphria. Now, full disclosure, I know Andy DiFrancesco, which is why I've reverted to his first name there for a while. I'm not talking or supporting ethics or transactions or anything in this. I'm focused on how to handle a crisis and a turnaround. But there's counter arguments to all of these points, and you have to take what you've been told with a grain of salt here from a short research report. And Andy's always been good with me. He's smart, he's a hustler, he's focused, and he takes a risk and definitely helps in the situations that I've seen public companies. I know, I've met Vic Neufeld. I don't know him very well. I've just met him a couple times in restaurants, most notably Harbor 60 across the road from here, where all good things happen in Toronto. So an example, Jamaica in March 2018, Cynthian, I don't even know how to say the name of that company, signed a letter of intent to acquire Marigold Acquisitions, which was a Canadian BC private company. And at the time, Marigold was in the process of purchasing a 49% stake in Marigold projects in Jamaica. In other words, it says the entity Marigold, the Canadian acquirer, didn't own the Jamaican project yet. It just had a letter of intent to do so. 4 months later, Cynthian flips this letter of intent to, well, it commits to flip this letter of intent to Aphria. And then they closed on the Jamaican project in September, and 2 weeks later, they sold it all to Aphria under that letter of intent. Aphria paid an estimated $145 million. And to cut to the chase on this, Andy DiFrancesco and some other insiders, including all alleged Vic Neufeld, they paid $118 for these assets in Jamaica. Not 118 million, not 118,000, literally $118, and flipped it to Aphria for $145 million over the course of a few months in 2018. Other points on this Jamaica project that says here that on the ground, Marigold's offices are registered in an abandoned building. They claim to lease Unit 51 of that building, which this short reporter went to Jamaica and found there was no Unit 51. It didn't exist. One of the company's founding directors denies ever being a company director. There was a scientist associated with the project that doesn't seem to have a profile on the internet. The company's plot of raw land is not approved to grow cannabis. There were some conditional licenses, but it wasn't fully done. And as I said, there were, the original purchase price was $118, not $1 million. So there's an example of these transactions that that netted that they say in aggregate sucked about $700 million out of the value out of the shareholders of Aphria. Other allegations: a $50 million Argentine acquisition publicly boasted sales of US $11 million, whereas a company employee said they were doing $400,000 in revenue. Aphria constantly generates negative cash. Its product is of low quality. Interviews with sources describe facilities are infested with bugs, stricken with mold, and have failed audit inspections with Health Canada. We believe that the uncovering of this alleged scheme, coupled with the massive asset write-offs, would have catastrophic consequences for its share price. That's one of their conclusions. And then they take a side tour in the Liberty Health Sciences. So Liberty Health Sciences is yet another public company where, again, they allege that DiFrancesco and Neufeld are insiders directly or indirectly. And they say that and that Aphria has also an interest in Liberty, which was true, and that they found the same sort of shenanigans going on at Liberty Health, that they acquired a Florida property, and rather than just buying it, they were acquired through a newly formed entity, netting the shell holders about a $5 million gain in 6 days. Holders of that shell were all of the insiders who I keep talking about. And then on the Liberty deal itself, there was sort of an insider family round on the shares. They bought them at 0.1 cents just days before private placement was done at 208 times that price. So there was lots going on there. And there, I think if you were to add up the Aphria shenanigans with the Liberty, you're getting close to $1 billion in allegations against Aphria. So tried to do a quick summary of the allegations from the short. And I ask you, would you want to invest in these people? I mean, because that sounds on the surface pretty bad to me. Is this crisis in terms of allegations worse than the CannTrust one? Or is it better, or are they just equally terrible? I mean, to me, it's at least as bad as CannTrust. or worse, because it speaks to the integrity over and over and over again of the Aphria situation. And I'll tell you that I'm doing Aphria today because a bunch of you really liked the CannTrust podcasts and video shows, and I had a couple of messages from a couple of different people saying, "Hey, you should tackle Aphria next." And I know what those people were thinking that requested that. They were thinking, these guys have been really bad. They've been worse than the CannTrust people. I can't believe the regulators aren't after them. I can't believe they've gotten away with this, and you should bring this to light. Not what I'm trying to do. Not my job. I'm trying to learn and teach from this, and I see Aphria the other way around. There's a bunch of allegations that are horrible. They may be true, they may not be true, but from a persuasion perspective, from a valuation perspective, they're terrible allegations. Yet the company's come away pretty much unscathed, which is what we're going to get into next here. This happened, as you'll recall, starting December 3, 2018. And by February 2019, just a couple of months later, stock had popped to $14 from the low that it was at. And, for the next several months in 2019, jumped around between $12 and $14. And then, took a slide over the summer of 2019 with the entire industry going down. But as we said today, it's right now about $8 and a $2.5 billion valuation, compared to CannTrust, which just took a dive, and there's no bottom in sight, as far as I can tell, on the CannTrust issue. Bottom line is, when you think of CannTrust, what do you think of? I think of incompetence. I think of deceit. I think of a disaster from a shareholder valuation perspective. And when you think of Aphria, what do you think of? You just forget about these allegations. They're in the past. It seems like forever ago, and everybody has moved on. And you want proof about that? Let's go through some evidence. So I have a resource report from Haywood Securities, and this is dated, I put my glasses on here. This is dated December 4, 2018, which is the day after the short report. Now, for those of you that don't know, if you're in the U.S. or if you're not in the capital markets, Haywood Securities is a long-standing investment dealer in Canada. I think its roots were largely in the retail AUA, the assets under administration game, but they've really, I think, in line with the cannabis sector, built up their investment banking and trading practice and their institutional side. They now have a Toronto location here, as I think their roots were from Western Canada. Don't hold me to that. They have a gentleman whose name I forget right now, who's instrumental in, let's call it, market making and trading in some of the early cannabis stocks, pretty much all of them, and that would include Aphria, I'm sure, although I've never been told that, but I can't see why it wouldn't include Aphria. There's no way that Haywood Securities didn't have a direct pipeline into the executive team at Aphria in real time. So the short report comes out December 3. Coincidentally, December 4, research report comes out from Haywood Securities, and it says shares under significant pressure following report on Latin American acquisition. Rating on the stock, a buy. It's giving it a buy. And it says that, I won't go through all the details of this, but it summarizes the report or sort of glosses over it. And it says they don't believe it all. They maybe believe some of it, but they don't believe it all. And it instead focuses on the value of the assets of Aphria in domestically in Canada, not in its foreign acquisitions. So it continues to talk through these points, and then it hammers home the company party line. You haven't heard that yet, but you'll see in a minute. And the company party line, which is that the board, when they did these acquisitions, the board of directors had third-party advice. They had legals that did due diligence. They had fairness opinions from independent advisors, and they had board of directors actually travel to the foreign locations and did some due diligence on these things, and so they stand by the way they behaved, and everything's fine. And according to Haywood, you should buy the stock on December 4, the day after the short report. So, I'm not pointing fingers one way or the other, but it would seem to me that Haywood probably wouldn't have any business motivation to jump on the bandwagon and drive the share price of Aphria down. Rather, quite the opposite. I'm sure, both from an investment banking relationship perspective, and they probably have a bunch of clients they've recommended to be in this stock. So they're probably highly motivated to support this and side with Aphria. But I think the important part is, they have a direct pipeline to Aphria. To me, I read this like an Aphria press release. And I think it is part of the response of Aphria, which is important to note. So that was the Haywood report the day after the short report. I have a Canaccord research report dated August 1, 2019. Price target, $16. It's a buy. You know what the market cap on $16 would be? Damn close to the $5 billion to where you started this saga last October. So in about a year, from a valuation perspective, not from a research valuation perspective, not a market pricing reality, this thing's pretty much gone full circle. This report, I won't go through the details. It's 10, 15 pages. Not once does it mention anything about this crisis. Not a word. There's nothing in there that talks about this at all. It's just out of everybody's mind, and it's gone. So what did Aphria do in the face of the short report, all in about 60 days, which caused them to win this battle? Unlike what CannTrust did. So let's go through that in detail. I think we're not bad for time here, and my cold seems to be holding up. So we will continue on. So the short report hit December 3. December 3, a release comes out from Aphria. So the same day, the very same day as the short report, it comes out and it says, we're aware of a short seller report today, just to paraphrase all this. And that Aphria believes the report is malicious and self-serving and an attempt to profit by manipulating Aphria's stock price at the expense of Aphria's shareholders. So the first thing they do that day is they hit hard on the deliverer of the information. And they take the own words from the short report and they put them back into them in the Aphria press release. It says, we are short Aphria. You should assume Hindenburg Research, including our members, partners, affiliates, employees, etc., all along with our clients and investors, are short in all stocks, and therefore stand to realize significant gains in the event that the stock price covered declines. Hindenburg Research makes no representations, express or implied as to the accuracy, timeliness, or completeness of the information in the report. Right, so those are actually footnotes and details to the short report itself, but they don't stand behind it. So Aphria is able to paint this report as a marketing bluff to try and kill the stock. I don't know if bluff is a word, but I like it. If it's not, I just made that up. The report makes reference to the company's acquisitions in Latin America, and then, as I mentioned before, in the press release, they hammer home on the fact that they had independent financial advice, they had fairness opinions from reputable firms that considered the transactions to be reasonable, and they did their own due diligence. So the credibility of the person saying the negative things about us is challenged hard, and we relied on independent third parties, not just ourselves, who are profiting from this, and they said we were okay. That's the message. Day one, right out of the gate, no delay on this whatsoever. December 6th, 3 days later, new release announcing a special committee to review governance issues around the transaction. Company's board of directors reiterates its confidence in the process leading to the acquisition. So we didn't do anything wrong, but just in case we did something wrong, in the face of this inaccurate and misleading accusations by certain short sellers, whose role is to profit from the decline in the company's shares. We're going to undertake a comprehensive review led by a special committee of independent directors against these and other allegations in the interest of protecting Aphria shareholders. So they form an independent committee, as did CannTrust. They did it within 3 days, and CannTrust was pretty quick on setting theirs up as well. I don't recall the amount of time, but this independent committee has a specific mandate that we're told about immediately as shareholders. The specific mandate is to review the allegations about the Latin America various acquisitions and to review corporate governance around those transactions. And it has independent members. Now, they're existing board members, but they're not the ones that were blamed or ought to have known about these sorts of shenanigans and corruption, alleged corruption, right? Whereas in the CannTrust situation, it seems to me that everybody knew that there was an illegal grow going on, or they ought to have known. If they didn't, it's because they weren't doing their job. And so the independent committee, let me give my proper air quotes there, committee at CannTrust was not really independent. It was independent of management, but it wasn't independent of the issue. And so there was a major flaw on the CannTrust side. So 3 days they set up an independent committee. December 12th, so the next press release, we're 9 days into this issue. They issue a press release that says they signed an LOI for a supply agreement. Do you know what that had to do with the crisis? Nothing. The message there was we're still alive and we're continuing business and good things are happening. And they had further positive, nothing to do with the crisis, press release on December 18, 20, January 2, January 8, January 9, January 18. I don't even know that most of those had to be released. I'm not saying they were just fluff, but it was a constant barrage of positive messages that did not focus on nothing but the crisis to communicate to everybody, external and internal stakeholders, that it's business as usual at Aphria. And I just think that stuff is really powerful from a persuasion perspective. December 27, they replace Vic Neufeld as chairman with an independent to, quote, enhance government best practices, end quote. And they brought in his replacement from outside the company. So remember point number one, you got to admit you're in trouble and we need to do something about it. Point two is make changes. And point three is have a specific plan. So they make changes. They get rid of Vic Neufeld within about 25 days of the crisis starting. And they replace him with a credible party who is completely from the outside. Compared to CannTrust, they fired their CEO and they replaced him with an interim CEO who was already on the board of directors and was there when the trouble began, when the illegal grow was happening, and reasonably, if you're an outsider, ought to have known that that was going on. Not the same thing. December 27, this is a cute one. They announced a takeover bid for all of Aphria at $11 a share. And this is from a company whose name escapes me. Here we go, Green Growth, from Green Growth out of the US. So it appears, both from the short, who addressed this issue later, and from the company's own materials, that Green Growth was yet another shell, and that it was yet more insider activity, possibly with the same parties, DeFrancesco and Neufeld. This is all alleged. I don't know the details. I didn't bother with it, but the company's own materials a day later suggest that there was a related party element to this takeover bid. Is it shady? Probably. Does it establish a value for this company, a floor from a persuasive perspective? You bet it does, right? It just starts people thinking that, hey, there's an actual buyer out there for this company, whether it's related party, real, a shell, shady or not, that there's from a persuasion perspective, there's a value to this thing at $11 a share. December 27th. December 28th, independent directors of Aphria issue a release saying that they reject the Green Acres bid because it wasn't for enough money. So they've told you there's a base for this thing of $11, and the next day they tell you, actually, that's not even enough. We're just going to reject that entirely. And I won't focus on the Green Acres further than that, other than say they went through with the hostile process. And of course, nobody tendered their shares, and it just died off the vine on that. And on the December 28th release, the independent directors, there was an admission in that release that the Green Acres had a related party element to Aphria. So it's not just something that was made up by the short people. All right, that's December 28th. January 11th, the CEO and co-founder, two separate party CEO being Vic Neufeld, and the co-founder, I'm not sure what his name is, but anyways, announces that they're gone for succession purposes, not because they're terrible people, not because there was any sort of fraud, not because they were lining their pockets, but they've been here 5 years, and we need some succession. And the chairman, the newly appointed guy who came from outside the company with great credentials, he becomes interim CEO. So they complete the loop on this, getting rid of the targeted people that you're going to point your fingers at, and bring in a new blood that's credible and completely not tainted by this. February 15, the special committee issues its report. So it was established in December, and by February 15th it was done, issued its report, and it had two main conclusions. One is that the purchases in Latin America, we probably paid too much, but they were at the high end of an acceptable range determined by outside parties. So we paid too much, but we didn't pay that much too much. And they released a 5-point plan in detail to enhance corporate governance. I won't take you through the plan. You can see it in the release, but the bottom line is we have a specific plan to deal with this going forward. And the last thing they did in that release is they confirmed that the CEO and the co-founder were now gone as of March 1. Then in February 19th, they did all the same stuff. Well, that's not true. What they really did was they just cut off entirely Liberty Health, that other party, that other company that the research report, the short report, throws into the mix as being part of the corruption. It just cuts them off entirely, cancels their deal early, gets rid of all their investments in Liberty Health, and they're gone. So that issue is over entirely. So all of that happened in between December 3 and February 19, and that specifically is the reason that we don't think of Aphria linked to this problem anymore. So let's compare that, Aphria versus CannTrust. In summary, what did CannTrust do? They set up an independent committee fairly quickly. It had undefined and loose mandate, and it was made up of directors who were not independent of the problem. They were there when the illegal grow happened. CannTrust announced that it was hiring investment bankers to consider strategic alternatives. What does that mean? I think any reasonable person would conclude that means that they're giving up, that they're just looking to exit this thing, and they think they have real trouble. CannTrust waited too long to deal with the regulatory side, and as a result, they ended up with a solution that put a halt to all of their revenue of cannabis products. They focused on the wrong problem. If you go back to the CannTrust materials, you'll see that what they did was they focused on quality issues. So they said, well, we grew cannabis illegally, but it was still up to our quality standards. And they didn't focus on the real issue, which was a complete lack of management and director integrity, which caused the regulator to want to shut them down, not because of quality, but because of integrity. And then they replaced their CEO with a director that was there when the problem happened. So they didn't bring in new blood. So let's go through our 3 points. Did they accept they were in trouble? Probably not. That's an internal issue, of course. Do they feel like we need to make substantial change quickly, right away, to get this done? Did they get rid of the bad guys and replace them with independent third parties that, outside stakeholders and intern stakeholders can say, okay, this is a fresh start? Nope, they didn't do that. Did they come out with a specific plan? No, they came out with a plan to have a plan, maybe. What did Aphria do? Day one, immediately, and I mean day one, December 3, immediately attacked the issue of the report and their integrity. set up an independent committee with a specific mandate, and they disclose the specific mandate. And when you do that, you define the problem, right? If you define the mandate to solve the problem, you inherently define the problem on your terms, not somebody else's terms. And they had on the independent committee people that were not related to the problem to begin with. They identified the what I like to call the bad guys, even though they may not be bad people, but the people that you want to transition into somebody new to solve this issue and to communicate to stakeholders that you're taking it seriously. So they got rid of the CEO, they got rid of the co-founder, replaced them with expertise from outside the company. They cut off ties to everyone and every entity referenced in the research report. They issued a bunch of good news releases to show that they're continuing on in business. They came up with a hostile bid, which maybe it was real, maybe it was a sham, but regardless, served, I think, to persuade the market that there's some activity going on in the stock. And they, in the end, again, within 60 plus days, announced a specific plan that was the result of the review that they were doing, a specific plan based on their review to improve corporate governance going forward. So who do you think did a better job internalizing and accepting the trouble that they were in? Who did a better job coming up with a specific plan immediately? And who did a better job changing the people and bringing in independent talent? I think the answer is obvious. And, again, this is not a comment on the integrity behind the transactions at Aphria. It's not about securities violations. It's not about ethics. It's not about whether you should be trading the stock or not trading the stock. But if you want to learn about how to handle a crisis and by extension, how to handle any troubled situation, what a great contrast between these two companies and how things ought to be handled. So with that, I think I have survived. My voice has survived. I haven't sneezed or coughed or done anything terrible to you. We will head into closing. Oh, we had a few comments here. What do we have? Kill the messenger. Absolutely, I agree with that. Tax implications were wild in those transactions. No, because they're all in foreign jurisdictions, so that would have been easily dealt with. Harbor 60 is awesome. Yes, I agree with that. A little overpriced sometimes, but pretty damn good. I like plan to make a plan. Yes, I agree. There you go. So there's my comments on the comments. What else haven't I done here? The theme song on. You know how to reach me. You can reach out to Ashley at Sinclair Range. Go to the sinclairrange.com website. I think our emails are on there. You can send a message on here. You can find us at Twitter on the Martinis with Scott channel. Send me a message there. If you want more insight, you need some help with the situation you have, always happy to do that. And lastly, please subscribe. Subscribe at Martinis with Scott on the YouTube channel, on Apple Podcasts. And can you subscribe on Spotify?
Yeah.
Is that a subscription? On Spotify as well. Thank you. Glad we made it through. Happy to be back after our 3-week holiday, and looking forward to the fall season. Bye, everyone.